The uranium market is once again in the spotlight, driven by renewed optimism for nuclear energy as a solution to the world's growing demand for carbon-free electricity. This enthusiasm is fueled by the rapid expansion of data centers for artificial intelligence and the push for greener power sources. Here's what most investors don't realize. Uranium prices have actually pulled back 30% from their peaks, falling from over $100 per pound down to $73 today. But here's the shocking part: uranium stocks are still surging, with some up over 50% in 2025 alone. As a result, investor interest in uranium stocks, especially junior miners, has reached a fever pitch. But before you jump on this bandwagon, you need to know which plays are real opportunities and which are just expensive lottery tickets.
Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time. Let your future shine, yeah, it's Warren's money time. Wealth on the climb, hear that information flow. Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time.
The nuclear melt-up. 3 hot uranium stocks under the microscope. A recent pitch from Junior Resource Monthly recycles the same 3 uranium stocks that have been promoted for the past 2 years: enCore Energy, EU, Uranium Energy Corp, UEC, and NexGen Energy, NXE. Let me give you the current reality check on each. enCore Energy, EU. Current price $2.83. Now a uranium producer, enCore operates 2 processing plants in Texas using in-situ recovery (ASR) technology. While they've started generating revenue of $3.66 million in Q2, they're burning through cash with a net loss of $6.33 million. The company is still not profitable, and analysts are projecting wild price targets of over $10. That's a 300% gain from current levels. Growth is expected from new projects in South Dakota and Wyoming, but the company's share count has increased rapidly, diluting per-share performance. Uranium Energy Corp, UEC. Goldman Sachs just raised their price target. Here's where it gets interesting. Goldman Sachs just initiated coverage with a $13 price target. That's over 30% upside from current levels. UEC has spent decades accumulating uranium projects and physical uranium, positioning itself for a bull market. Goldman believes UEC is perfectly positioned to benefit from the Trump administration's push to revive domestic nuclear fuel supply chains. The U.S. consumes 29% of global uranium, but produces less than 1% domestically. That's a massive opportunity. NexGen Energy, NXE. Current price $6.82. This Canadian uranium developer has seen its stock fluctuate between $3.90 and $8.96 over the past year. Currently trading around $6.82, analysts are projecting potential gains of over 50%. NexGen just received key environmental approvals for their Rook project, and some forecasts suggest the stock could hit $10 plus if uranium demand continues growing. While these companies have seen their share prices rise with uranium's renewed interest, they remain highly speculative and volatile. Their performance is closely tied to swings in uranium prices and investor sentiment, rather than steady operational results. The broader context: nuclear's complicated comeback. Investor excitement is grounded in a real shift. Attitudes toward nuclear power are changing, with government incentives and regulatory reforms making new reactor construction, especially small modular reactors, SMRs, more plausible in the next 5 years. Microsoft, Alphabet, Amazon, and Meta have all signed deals for nuclear energy to power their future data centers. But here's what the hype machine won't tell you. Building nuclear reactors remains a slow, expensive, and complex process. Most uranium is traded on long-term contracts, and the market is shaped by government policy, strategic stockpiles, and periodic supply disruptions. Historically, uranium price spikes have led to dramatic runs in junior uranium stocks, notably the 2007 surge, but these have often been short-lived, followed by long periods of low prices and poor returns for speculative miners. The current cycle is driven by new demand from AI-powered data centers and the push for green electricity, but the future profitability of uranium miners, especially juniors, remains uncertain. If you're finding value in this analysis, you need to know about my free newsletter on Substack. Every week, I send out exclusive market insights stock picks, and investment frameworks you won't find anywhere else. It's completely free, and over 2,500 investors are already getting these delivered straight to their inbox. The link is pinned in the comments and in the description below. Don't miss out on these weekly insights. Smarter ways to invest in the nuclear renaissance. While the allure of a 1000x return from a junior uranium explorer is tempting, history suggests that most investors are better served by focusing on established, profitable companies or those involved in the nuclear fuel supply chain. Cameco CCJ. Current price $75.60. The world's leading uranium miner, Cameco, is already profitable and has a dominant position in high-grade uranium production. The stock has gained 47% year-to-date, but it currently trades at expensive valuations. However, its Tier 1 assets and 49% stake in Westinghouse give it exposure across the entire nuclear fuel cycle. Centrus Energy, LEU, the real winner, up 251% this year. Here's the stock. Most investors are missing. Centrus Energy has absolutely crushed it, gaining 251% year-to-date while the broader mining sector is down. Why? They specialize in uranium enrichment and fuel processing, a critical part of the nuclear supply chain. Their high-assay, low-enriched uranium, HALEU contract with the Department of Energy is a massive growth catalyst. Current price forecasts suggest the stock could reach $141, though it's trading at premium valuations. BWX Technologies, BWXT, the infrastructure play. BWXT reported stellar Q2 results with revenue of $764 million and raised their 2025 guidance. They secured Navy contracts worth $2.6 billion, providing years of consistent revenue. The stock is up over 50% this year, focusing on nuclear components, fuel, and reactor parts for both power generation and defense. Additional smart strategies. If you're interested in the nuclear sector but wary of the risk associated with junior miners, consider these approaches. Diversified uranium ETFs. Funds like the Global X Uranium ETF, URA, or North Shore Global Uranium Mining ETF, URNM, provide broad exposure to the sector, including both miners and fuel cycle companies, reducing single stock risk. Utility companies with nuclear assets. Major utilities operating nuclear plants such as Constellation Energy, CEG, offer more stable returns and dividends with indirect exposure to rising uranium demand. Monitor regulatory and policy changes. The pace of nuclear adoption will depend on government incentives, permitting reforms, and public acceptance. The Trump administration's commitment to expand nuclear power to 400 gigawatts by 2050 could be a massive catalyst. Watch for overvaluation. Many nuclear-related stocks are trading at historically high valuations. Cameco trades at over 80 times earnings, and many stocks are up triple digits this year. Be cautious about buying into pure hype. The reality check most investors need to hear. Here's what the uranium bulls don't want you to know. This sector is notoriously cyclical and driven by hype cycles. The last uranium boom peaked in 2007, and many investors who bought at the top waited over 15 years just to break even. That said, this cycle feels different. The AI data center boom is real, and the power demands are staggering. Tech giants are signing nuclear deals because they need reliable, carbon-free baseload power that solar and wind can't provide. The uranium sector is cyclical, volatile, and often driven by hype as much as fundamentals. While junior miners like EU, UEC, and NXE may offer explosive upside if uranium prices spike, they also carry significant risk. For most investors, a balanced approach works better. Favor established producers like Cameco, fuel cycle companies like Centrus Energy, infrastructure plays like BWX Technologies, and diversified ETFs. This gives you exposure to the nuclear renaissance without betting everything on speculative junior miners. The nuclear comeback is real, but so are the risks. Don't let FOMO drive your investment decisions. The companies making real money from nuclear energy today are the ones with actual contracts, real revenue, and proven business models, not the ones promising the next big uranium discovery. Remember, in uranium investing, the tortoise usually beats the hare. Choose your positions wisely.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'cause it's Warren's money time.